Welcome YouTube. It is Monday 6 p.m. 2 more hours till candle close. Today we're going to go through some charts and we're going to cover a few ideas that I had in mind. I actually wrote down a list of what we're going to cover. So the first thing I wanted to cover is on the weekly chart. If you take a look at the past bottom right here, let's go on the log scale for 1 second because it's a little bit clearer for us to look at. So if you see this Fibonacci retracement right here, take it off of log scale, it basically hits a 93 retracement. Okay. And by the way, this is a new chart setup, so I have to readjust the scales and whatnot, make it look better. But it hit the 93% from the bottom to the high, and then came back down to hit the 93%. And currently, and the time is 65 bars, but the time is kind of regardless right now, because if this is a fourth wave, it's going to be like all the way down here, which we're going to basically vote on the wave count. It's either going to be a corrective wave count, this is a B wave, or this is a wave 1 for an impulse. And guys, I'm going to need your help. We're going to make a vote, we're going to make a pool, we're a poll, and we're going to see which one is the best or better count, because this is the whole point of the market, right? Is about a consensus. All right. So like, is Bitcoin worth more than it is right now, or is it actually worth less? So let's talk about the fractal type pattern, right? The bottom formation, does it equal the top formation? Another thing I'm going to mention right now, guys, as you can see, the price is at that 93% pull back. It's the same thing that it was right here at the beginning. Bitcoin has never double topped, okay? It has, in the history of Bitcoin, we have never double topped, okay? So if you go all the way back down, every single time that we have pulled back, it has not even been close to a double top, right? So that's something to keep in mind, because every time we blew past all-time highs, it just shot up. And then here, this is the pullback. Of course, if you guys have done the back test, you know what it is, but it's always good to have a reminder, right? So it comes back, pulls back, and then comes back down, and then pulls back, but it's not even close to a double top, right? It takes its time here to accumulate at the bottom, makes this cup formation, and shoots upwards. And it went all the way to 20,000 right there. Very, very fast. Higher lows, you know, simple trend following rules. And then again, bang, they sell right on market. Okay, and then they basically hit the 61.8 is basically what they do, and then they bang, hit it on market again. So that's why I think that there's a higher probability of us breaking out, because it's never really done it before. And if you take a look at the higher, grander scale of it, you're looking at the 61.8. So guys, there's going to be a lot more ideas in this video. Just stay tuned. Definitely stay tuned, because we're going to cover Elliott wave theory right next, and also a couple more things that I've discovered in the market. So that's the weekly chart, guys. That's what I'm looking for. This 93 degrees or whatever, the 93 ratio, is what I'm looking for right now. Now, when it comes to time, we have much more time and opportunity. So let's go down to the daily chart. And I just wanted to point to your attention one thing on this chart for you guys. In the Discord chat, like I said all the time, that I've been studying the strategies and the systems and the mindsets for us to understand what the market makers are going to do, and what kind of bots and algorithms and what kind of think is behind the market. And my Discord chat, Mastering the Basics, is going to be guided towards the people, the traders that want to be more like the market makers, that want to be in tune with the market makers. We're talking about the big money, the guys that control the asset, the guys that are holding and sitting on the Bitcoins. What are they doing? What are their plans? You can literally tune into their minds. And of course, my group is not going to be anything about memes. It's a serious group, and because you want to be in tune with the market's mind, the mind of the market. Okay, and there's no joke about it. And so if you think that it's going to be a meme group or anything like that, it's not. And if anyone is going to be posting anything that is not in tune with becoming the best version of yourself, they're more than likely gonna get kicked. And that's why I think it's going to be more serious if you actually charge people. And so we're going to get into the lower time frame and the higher time frame charts, guys. I need your help. I need your help on this voting for Elliott waves. Okay, voting for Elliott waves, because this is kind of going to get us thinking properly about the market. Now let's take a look at this daily chart. I've had this count here in my group for a while. I told you guys basically this is the accumulation zone. The target was right up here. That was the setup. We never got hit on the stop loss. Boom, you would have got 33%. And by the way, guys, there was an accumulation zone down here, plus the triple bottom. But the target is, I think, at 80K. So you would still be in this trade. It's just the macro, right? The macro trades and the 15 minutes, the lower version. So you see this timeline right here. This is going to be really important. So August 24th, stay tuned for that. Probably going to make something a Discord update. Let me put an alert for us. Now let's take a look at the bullish count. The 5 hour is probably the better. We'll go to the smaller time frame, and then we'll go to the higher perspective. Now, when it comes to the Elliott wave theory, there's two counts that we can be looking at right now. Some people, I think this is it right here. Okay, I think that there's 5 waves here. That's what I think. But some people think that this is of the bottom of the wave 4. And guess what, guys? A few months ago, literally when it was at the bottom right here, this was the invalidation at 20-something K. I called it as the 4th wave, and then that the 5th wave was going to hit 100K, and it's still going towards, it's like the price is right here, right? So that was a pretty good call in my opinion. Here was the monthly right before the summer, and that's where, you know, it was like literally a 2% stop loss right here at the bottom here, and you're already up 100 and something percent. Okay, so, and here's some different charts here for GAN. So the reason why I'm a little bit more bullish than I am bearish is because of the fact that this time in November is like, we still have a lot of time, and look how close we are for the all-time high. And whenever that we do cup like this, like we've seen in the history, it just kind of blows up. And so let's take a look at the higher level time frame. This is the bullish market cycle, and this is where I need you guys to vote. Either this is the bull cycle, the bull phase. Okay, sorry for so much angles right here. I like to clean it up on higher time frames. So basically the 5 day is going to be quite much more clear. So the 5 day is going to be the macro count, and so it's going to look something like this. Okay, let me zoom in here. This is going to be the impulse of the 5th wave. Guys, what do you think about this count? And let me actually add something that's going to help validate this idea. It's called an EMA. So the EMA looks something like this. And why does it validate the idea? Is because if the wave 2 does come back down, we know that there's some type of support, some type of bounce. And that's why I like trading on the macros, because you can have a higher probability if you know what to look for. So if you take a look at this, is the bullish cycle right here. It's trend following so close to the candle and the prices that you know it's algorithms controlling the markets here. And guys, this is the index, so I believe it's all Bitcoins kind of put together and whatever averaged out. If you put this in a real exchange, it actually works out even better. So let's talk about the 89, because this was the lower one, and then of course we can go into higher time frames, but I do not have any higher degrees at this point. This is the highest degree that I have. So let's take a look at the count once again. I need you guys to vote. This is the A, and now let's take a look at the lower degree. So let's start off on the 3 hours. Take off the moving average. Hopefully you guys took the time to like and subscribe to the channel. So here's the 3 day chart, and guys, I've been messing around a little bit with the channels, the fib channels. Why? Because I'll show you right now. you see this right here, the 1 2 3 6, it's actually in perfect alignment with our strategy already, the one that's been making us so much money, right? The one that's been so accurate in the market. Although it did blow past our target, it's fine, because so your entry would have been here and then your target would have been like right here. It did come back down, and then this one right here is the target that we're kind of watching here. So the fib channels are kind of interesting, and I think I'm going to add it to the strategy because it's so easy to add it to the strategy and it's gonna work better. So here's the 13 hour. This is the idea that we're looking for. Trying to figure, oh yeah, so right, if you guys know how to pull Elliott wave theory from the A to the B, this is an extended, so you pull it like this, so A to the B, and then you get the extension. Of course, it's at the 1 to 1, and this is where the C wave. The only problem I have, guys, with this one is that the time is not up yet, and so that's not going to be very good. I also have to add something. I'll give you guys a treat. Okay, go on the 2-day chart or any real chart, and you take a look for timing. One of Gann's famous rules is to use previous moves. So the least amount of time that we can be looking for is this one right here, be honest with you guys. And if we're still consolidating up here, more than likely it's going to come back down, at least for a pullback into those moving averages, and see if we find the support. Because guys, when Bitcoin does make a decision, it comes down so hard on the order book, on the supports, because the whales, when they sell out hard, guys. And so if you're good and skilled at looking at the blockchain transactions, that's probably going to be an extreme edge on the market, because you kind of know where the whales are going to dump on the market. Like, let's take a look at the history, guys. First of all, this one right here, bang, they start selling on the market, right? And take a look at the volume. This one actually wasn't that bad, but still a big correction. We're talking about how many percentages, right? We're talking about 30 to 5%. But usually when it happens like that, it hits the books so hard. So the data is kind of loading up. You can actually take a look for yourself. So 30%, and then comes back up, whatever. This one was kind of a double top, but anyhow, for a smaller one, right? And then this one here, it comes up for the 61.8. And so, yeah, now this is like, are we really going to double top here? We'll see. It's all about time, guys. So we got November 7th right here on the orders. We have the dates all coming up. October 24th, so that's basically the end of the month. And by the way, guys, this one here is going to be the second target, is going to be up here. But if you break the all-time high in the second target, are they really going to take it there, or they shouldn't trail it? Probably trail it. So you also have the Fit 5 EMA, but it might be exhausted. So the 21 hasn't been tested yet, and last time it's been tested, it just did something like that. So triple bottom, or triple bottom. In the fourth one, it couldn't support it anymore, and then it hit the 89, did its Bollinger Band pattern, and then just started going up and forwards a little bit here. So that's kind of what I'm watching for now. And so the 8 hours is something that I'm pretty interested in as well. All right. So I hope you guys know what the vote is. It's either this is B, so it's going to be basically a flat, or the impulse. Which one do you guys think? So double top. Maybe they'll pick it up at the bottom here. This is what I have so far, because it's a direct replica of this move right here. But if it comes back down all the way, you know, it can go down all the way to the 1.618. More than likely going to be the 1236, 1236, yeah. Or the 101, which is basically a double bottom. But man, they would have to break this bottom because they want the supply here, and then they will buy it up. And they'd have to short living living s out of this. And then I just don't know, it's all about time when it comes to this, because okay guys, the psychology of the market and the actual reason why I'm making this video, again, it's about the market maker psychology. This is why we're here. We want to know, we want to tune into the minds of the market makers. And how do you know that? It's just by understanding real simple math of supply and demand. Look, and psychology. So once you actually take a look at the mind of the market, and you can see that there's more volume at the top here, guys, right? There's more volume at the top of the market here, guys, which means that people are in profits. Because we're at high levels, people are in profits, and it makes them have a bigger margin, a bigger balance that they can risk. And once they do risk it, once they put their orders on the books as buy limits on moving averages or on Fibonacci's, whatever, and the smart money knows this. They know that people get greedy at the tops. They know that people get greedy or at the tops when they have more money. So that when they do sell hard, guys, they sell hard on the books. They go and literally dump their inventory on the books. And so this makes a weak hands, because they just dumped all of their inventory on the people that are now over leveraged. Does this make sense? Because yes, they were in profits. They might have been up 100%. But if you get greedy at the tops because you want it to go upwards and you want it to explode, yes, it can, but it has more risks at the tops. And this is why market makers pay more attention when they're at the tops like this. So time is extremely important, because once the market makers have a whiff that it's not going to break out, they're going to sell, and they're going to sell on you, and they're going to sell on whoever is buying, whoever's on the order books. They're going to buy, they're going to sell to. And well, that's just basically how the markets work, guys. I hope you guys like this video. Subscribe to the channel. Peace.